Have you noticed the dramatic shift in the market, right? With interest rates rising, sellers are panicking, and the market seems a little flat. A lot of buyers are moving to the sidelines. So, what I'm going to talk about today is called the Seller Buydown. It's something that we did back in 2009 to 11, I want to say, and it worked great. And I think it's a huge opportunity now for both buyers and sellers in this market, and we're here to explain it to you. And I did want to, we did a big presentation for realtors about this, but I did want to do something to kind of help everybody, the buyer, the seller, explain the situation to everyone so it's not so industry related. And that's what we're doing here. I'm Garrick Wordmuller. I'm president and CEO of Fresh Home Loan Inc. in Alameda, California. I'm an independent mortgage broker, and we are talking about this crazy market and interest rates, right? This is a big reason why things have changed so quickly. Inflation and interest rates, right? We see all of these problems out in the marketplace today, which is hurting both buying and selling power, if you will. And affordability is the real issue. And this is just a snapshot of 6 months of between December of 2021 and June of 2022, and we see that we have rates at 6%. It basically takes away 10% of the buying power for the buyer, and the buyer doesn't want to overpay for a house if their payment's going that far up. Right? They want the price to come down. So, and I'm just going to pull all these up for you and kind of discuss what's going on. This is statistics from the California Association of Realtors. But in June of 2022, we did see a $36,000 decline after May rising 1.6%. Condos dropped another 18,000. Sale of houses dropped 8.4%. Condos dropped 10%. And San Francisco Bay Area, we saw a 7% decline or downturn. We think it's a downturn due to the tech sector, but we saw prices fall 7%. And basically what happens, interest rates rise and we see mortgage applications go down. And I've never seen it go this fast, but if you look right here, we saw mortgage applications, according to the Mortgage News Daily, go down to the lowest point in 22 years. And so when that happens, there's obviously a lot less buyers buying houses. And that's when we start having the conversation about the seller buy down. And so let's remember here what we're trying to do is, have a successful negotiation. And that's when everyone wins. So we do need to be the solution to the problem here as far as, this is more for the agents out there and whatnot. But here's the problem, right? We have a house that's too expensive, but we don't want to do a price reduction. And the solution is this seller buy down, like I say. And so what happens is the seller gives a concession or a credit to the buyer. And usually that's just kind of spread across the HUD as if like let's just say, as hypothetically speaking, we often have like a roof issue and we don't want to disclose a roof issue. We just say we're going to have a $6,000 credit towards non-recurring closing costs. And then we move on, and the $6,000 credit kind of gets spread across the closing costs or the HUD or the settlement statement, however you want to say it. But what we do here is we actually ask for a credit to specifically buy down the interest rate. And this is a permanent buy down. So, who benefits from this? You would think that, this is more for the buyer than the seller, but again, when interest rates are rising and mortgage applications are going down, this definitely creates a win-win situation for both. And here we're going to have a couple examples. And one thing to look at too when you're out there, you won't want to weigh your value too heavily on most real estate websites. MLS comps are really good, of course. And House Canary is a website I know that's pretty popular with industry people. And so I just want to mention that because obviously the house does need to appraise. Now, scenario number one, we have a purchase price of $1 million and a 10% down payment and a loan amount of $900,000. And so what we do when we look at this information, right? We've already discussed that. Let's just say, and these rates, I'm not quoting the daily rate, obviously, right? Hypothetically speaking, we have a 5.25% interest rate. The term or the years, it's a 30-year fixed. Cash to close in this scenario was $121,247, and we have a monthly mortgage payment of $49.69. And in this scenario, the seller's going to net $1 million. However, no one's really, it's some interest, few people, open house, no offers. So the discussion on the table is, do we lower the purchase price and entice another buyer? And so let's say we did that and we have someone in contract now and it's $50,000 less on the purchase price. Loan amount goes down, closing costs go down a little. Monthly payment is 47.21. So they save $248. The buyer does in this scenario, and the seller's out $50,000, right, due to the price reduction. So both people are out. Uh, you know, that's where we lie. Let's just say though, if we did a 2% credit, this is an $18,000, 2% of the loan amount. Now, credits can be of loan amounts or specific dollars, etc. But this is how it worked. We did 2% of the loan amount, and that's $18,000. And so we bought down the rate to 4.5%. Look at the APR difference, 4.665%. Cash to close was very similar to the 950. Almost, it's basically the same thing. And the monthly payment is 45.60. The monthly savings are $409. And the seller is out 18 grand versus 50 grand. Now, here is where the magic happens, as I say. So get a load of this. If the seller was to drop their price to match the mortgage payment, right? So the buyer has the same payment as the seller buy down, you'd have to go all the way down to 917, 535. The loan amount's 825, 782. Cash to close would be 106,000. We have the payment, of course, stays the same. But look at this. The seller would be out $82,000, 465 to match a price reduction with a seller buy down. So that's pretty fascinating stuff, wouldn't you say? Whoa, sorry about that. So the bottom line then is the seller net proceeds, for sellers, this is what we're looking at. Meanwhile, the buyer got a below market interest rate. So one thing I want to do, and I'll go over this one quickly as well, but this is what I like to call an agnostic program. That means it works across the board, FHA, VA, jumbo. It really should work across the board. So let's go into this one here. We have a $500,000 price on a FHA loan, 3.5% down. The loan amount's $490,000. Your cash to close is 24,216. I'm sorry, here's your rate, 5.99. APR is a little higher on these because mortgage insurance on FHA loans are higher. But your cash to close then is 24,216, and your monthly payment is 39.42. Now let's just say the house again is sitting on the market, so we're gonna do a seller buy down a price reduction of $25,000. We got our interest rate here, APR, cash to close is barely less by $1,000, and the monthly payment is $198 less with the price reduction. Now, instead, we're going to do a $10,000 credit, which is 2% of the purchase price in this case. And let's see how that goes. So then we have a loan amount of 490, 953. Interest rates way down to 5.125, and the APR is a lot further down too. And then cash to close, 24,218. The monthly payment is 36.75, and your monthly savings are 267. And then the seller nets 490 versus the 475. Now, once again, let's take a look at doing a price reduction to match the seller buy down. We have 466 here, 10% down, a 457,734 loan amount, 5.99 interest rate. Cut to the chase here. Seller is going to lose 33,749. So you can see it's pretty big doings out there. And so let's just keep in mind here the best ways to use these. There's going to be a credit that's asked for, the seller saves up front, there's more buyer interest in the property, home values are stable, buyer gets a lower interest rate, and it avoids the stigma, of a price reduction. So it really is a win win situation. Now, sellers, why you might want to consider this is you attract a wider pool of buyers. It's got 3 times the impact of a buyer's purchasing power versus reducing your list price. You reduce your risk of the deal falling through if you're paying to get a below market rate. And I'm telling you, in this market, sometimes we just closed one last week. And I mean, that rate was gone because rates had gone up. So, I mean, like, it was actually stressful for everyone, and there was no problems with the deal, but I just wanted to close right away because I knew that rate was going bye-bye if we didn't close, right? Because you couldn't get that rate anymore because things have gone up so quick. So you also gain a competitive advantage versus other homes listed for sale because you don't have the aggravation and financial loss of reducing the list price to compete with other homes that may be listed for lower. So again, this is something where everybody wins. Buyers, you're going to stand out. You're going to get a lower rate, a lower payment, and you're going to now. Apparently, you can write off these points, but I am not a tax professional. Sellers, you've avoided a price reduction and you've gotten more money in your pocket. List agent, you have really created a situation with happy clients. You've done your job getting the most money out of the property for your client. And, this is something now you can use and have in your back pocket to market those FISBOs and expired should you have any in your area. And buyers agents, you have also done a phenomenal job. The offers stand out. The client is stoked, and you've targeted the seller buy down opportunity and created expert support. Now, one thing, this is agent tips, but let's just say this is tips for everybody. Um, whether it's your listing, you're the buyer, you're the seller, the agents need to really get it on both sides and know how this works. And you really do need a lone person that knows what they're doing. I've been in this 22 years, 21 years now. I'm an independent broker, and we really have the product, I want to say, and we get it. Like I say, I've been doing these since 2009. This is good for listing presentations. One thing I'll say for buyers and buyers agents out there, to really make this work, it's better if the property's been listed for a little while. And Yeah, I'll just say that. And I'll say wholesale lenders once again. I kind of dabbed into this, and I'll get off my soapbox here, but we will have lower rates than the retail guys, meaning higher offers, just a better opportunity for everybody. This is what happened in 2021. If you used a wholesale mortgage broker, such as myself, borrowers saved an average of $9,407, and minority borrowers saved an average of $10,424. So you tell me if you'd rather work with a big bank or someone that knows what they're doing that saves you $9,407 to $10,424 on your transaction, right? So there it is. Again, I'm here to help you, and I'm Garrick Wordmuller, President CEO of Fresh Home Loan Inc. We are independent mortgage brokers that work for the people. Thank you so much for watching. I hope you really learned something from this. And again, I am here to help you guys out, structure these situations. And, we've done a lot of work on these for people in the past few months, and we're willing to do a lot more for you to get you into your home, help you sell your home. As an agent out there, we're here to partner with you as well. So again, I really thank you for watching this, and have a wonderful rest of your day.